What's going on, guys? This is Zach with Engineered Wealth, and today I want to talk about the top 5 benefits of investing in real estate. If you're new to real estate investing and really want to learn more about the advantages, please watch this entire video to the end and leave a comment below with any questions that you have along the way. First off, there are many forms of real estate investing, and not all real estate can be treated equally or benefits from what I'm going to discuss in this video. This is not geared for purchasing land, which is a little bit speculative, or investing in real estate investment trusts, which are essentially just buying stocks that go up and down in value. The benefits I'm going to discuss in this video are for any and all rental real estate where you collect rental income from tenants each month. This could be in residential or commercial property. In addition to collecting rental income, I'm actually collecting likes for this video, so if you could please go ahead and destroy the like button. You know, think of it as a game, and by turning the like button blue, well, that's it. You win the game. And one last quick note, this video is for entertainment purposes only. I am not a CPA or a financial advisor, so please consult a professional before making any investment decisions. For today's example, I'm going to use the first property that I purchased myself, which is a 4-bedroom, 2-bath house in Tempe, Arizona. I rented this property out to college students who were attending ASU, who were really excited to move out of the dorms and start throwing house parties. Ask me how I know. The purchase price was $200,000 and I rented it out for $2,000 a month. This is a perfect example of the 1% rule. The 1% rule is a quick baseline calculation to determine if a rental property is a good investment or not, and all it states is that the rent collected each month should be at least 1% of the purchase price for that property. That being said, let's go through these top 5 benefits and look at the results as we apply them to the subject property. Number 1 is cash flow. This, in my opinion, is the greatest overall benefit of real estate investing, and cash flow can be defined as the rent collected minus all the expenses, and any money left over is the cash flow. I like to call it mailbox money because every single month you're collecting a check with minimal effort, thus providing passive income. For our example property, let's say we put 20% down on a 30-year fixed rate conventional loan at 4% interest. This will give us a monthly loan payment of $763. Now let's also assume you have a property tax and insurance payment of $300 a month, and we'll also set aside $200 a month for any repairs and maintenance. So when we add up our total monthly costs, it comes out to $1,263 per month. Now we're going to subtract this from our monthly rental income of $2,000, and we're left with $737 per month. So every year you hold on to this property, you'll be earning $8,844 in cash flow after all your expenses are paid. Earlier I mentioned we put down 20% for this property, and that comes out to $40,000. Now when we look at cash flow alone, we're able to completely repay back this initial upfront investment in just 4.5 years. From this moment on, the property now pretty much has an infinite return for however long you decide to keep it. Alright, so number 2 is principal paydown. While cash flow is a very obvious and material return in real estate investing, principal paydown is more of a hidden benefit that is harder to see. Every month you pay your mortgage payment, a portion of that goes towards interest, but another portion goes towards paying down the principal of the loan. This means that every month after you collect rent and then pay the mortgage, a small portion of that payment goes towards building equity in the property. You can relate this to, say, putting money in a forced savings account each and every month. Now, while you can't use this money until you sell the property, it is in fact increasing your net worth. In our example, I stated earlier that our monthly mortgage payment was $763 per month. Now, of that payment, $533 goes towards interest, and the remaining $230 goes towards paying down the principal of the loan. Additionally, because loan payments are amortized, the principal portion starts off pretty low and the interest is very high. However, as you make more and more payments, the principal amount tends to start going higher and the interest starts going lower. In the first year, you would add $2,807 to your net worth just by paying down the loan. As you continue to pay this loan year after year after year, the principal portion will at a certain point exceed the interest payment. For our example, this happens during the 12th year, and in this year, your principal paydown will be $4,532. This is a great overall benefit to real estate investing, and although the buy and hold strategy doesn't really fit into the get rich quick scheme, It definitely falls into the bucket of get rich for sure. Okay, we're up to number 3, which is appreciation. Your tenants are really gonna appreciate you providing housing. No, that's not what I'm talking about. While nothing is guaranteed in this world, it's almost certain that property values will go up over time. Take a look at this graph from the Federal Reserve Bank of St. Louis, which shows the average sales price of all homes in the United States since 1963. The shaded gray areas show all of the US recessions, and although you can see that there are some dips here and there, the point is that if you purchase real estate, you're almost guaranteed to see that value go up in the long term based on all the data we have. National real estate values have appreciated 3 to 5% per year. If we look at our example property, over the course of 30 years, our $200,000 property will be worth over $485,000. And over this time frame, you've now completely paid off your 30-year loan and you own the property 100% free and clear. Crazy. Now, I just quickly want to touch on how leverage affects real estate returns. If we look at our original purchase price of $200,000, we have a 242% increase over the 30-year appreciation. But we only put $40,000 down for this deal and the tenants paid off the entire loan. So actually, over this 30-year period, we have a 1,213% increase just on appreciation alone. Insane. Lastly, property values are not the only thing that increase over time through appreciation. Because appreciation tends to track inflation, rental income will also increase at a similar pace. If we take the same 3% increase every single year for rental income, over the course of 30 years, our original $2,000 a month is now $4,854 a month. This property will now generate a gross rental income of $58,248 per year, and at this point, over this 30 years, you now have a completely paid off loan. I really hope I'm starting to convince you why real estate is an awesome investment. Okay, we're gonna jump right into number 4, which is tax benefits. When I first started investing in real estate, I had no idea of all the tax advantages that were available to me. When it came time to do my taxes, the first year after buying my property, I worked with a CPA and it unlocked a whole new world of opportunity on ways to keep more of my hard-earned money in my pocket. You see, the government collects money through taxes and ordinary income from a job is taxed at the highest rate. However, the government knows that if it gives an incentive for people to invest, they will go out and take risks to provide an even higher earning potential for themselves. The government gives these incentives through tax breaks and advantages, and real estate has some of the best there is. The 3 that I want to talk about today are depreciation, 1031 exchanges, and the step up in basis. Okay, first, depreciation is a tax incentive that allows an investor to deduct a portion of the initial property value or basis all the way down to $0 over a certain period of time. This time being 27.5 years for residential real estate and 30 years for commercial real estate. The theory here is that the property will experience wear and tear over its life, and that requires ongoing upkeep to maintain. If we look at our example property with a purchase price or basis of $200,000, we can depreciate this property over 27.5 years. This means that every year we can deduct $7,272 against the rental income, thus lowering the total amount of taxes owed. This is an awesome benefit. Second is the 1031 exchange. In the IRS tax code, section 1031, the government allows for a like-kind exchange of real property. This means that if you sell a property for a higher amount than you purchased it for, essentially you can defer the taxes to a later date by buying another property. For our example, let's say the property that we purchased for $200,000 experiences rapid appreciation over a few years and is now worth $300,000. If we were to then sell this property, we would be subject to capital gains taxes on that $100,000 profit. However, if we roll all of that money into a new property through a 1031 exchange, we would avoid paying any taxes at this time. The great thing is, you can repeat this process over and over again, continuing to defer the taxes to a later date as long as you keep the money invested in real estate. This leads us right into our third strategy of the step up in basis. I just mentioned that capital gains taxes are based off the profit when selling a property. But let's say you never sell any of your properties and you hold on to them forever. Well, one day will come when you essentially pass away and your family will now have to inherit all of these properties. After all of the appreciation and tax deferment through 1031 exchanges, there potentially could be a lot of taxes at play here. However, when it comes to inheritance, when the property transfers ownership, this triggers what's called a step up in basis. This means that if your family decides to immediately sell all of your properties, they will pay little to no taxes because the value gain is essentially zero because they acquired them at the present value. When the property transfers ownership, the value that they are purchased at no longer matters because they have been stepped up in basis to the current present value. This is an awesome way to build generational wealth for your family. The last benefit that I want to go over is the improvement of the community. So far, we have gone over 4 great monetary benefits of real estate investing. However, I feel like this last topic is extremely important to go over as well. When you make the decision to own rental property, you in turn become a landlord. And this responsibility should not be taken lightly. You owe it to your tenants to provide clean and safe housing at a fair price. Ultimately, you're providing a roof over someone's head, or maybe you're providing a space for someone to start the restaurant they've always dreamed of. No matter the case, take pride in all of your real estate investing because it'll really be a positive reflection of your character and your tenants will take notice as well. Additionally, being a landlord allows you to stimulate the economy by working with local vendors such as cleaning companies, repairmen, contractors, landscapers, the list goes on. This creates more money flowing through a targeted area, and when capital is invested in certain locations, it tends to lead to more investment in an overall better community. It's a really great feeling to be part of this positive change. And that's it. I hope you guys are able to find today's information valuable. I truly believe that real estate is one of the greatest investments that you can make, and the benefits are truly awesome. This is the quickest way for anyone to achieve financial freedom, and there is no limit to how large you can grow your portfolio because there are trillions of dollars of real estate out there. If you know anyone that would benefit from watching this video, please go ahead and share it with them. Thanks for sticking around to the end. Please go ahead and subscribe to this channel to stay up to date on all future videos, and until next time.